And tonight we're focusing on economic growth. We'll bring you predictions throughout the show for South Africa, the world, for China. That is hugely important for our exports and global growth. But the number of the day is 2.4%. This is not the growth expected for South Africa because according to another prediction, we won't even muster 1% growth this year. Neither is this for the world, which is steaming ahead. Growth above 3% this year. So 2.4% is growth for Africa and sub-Saharan Africa specifically. Now, for years, South Africa has been a weight in our own region. Nigeria was galloping ahead, but that was before oil prices came down and the country hit a long recession. And although Africa still has some of the fastest growing economies in the world, this shows that currently as a region, we're muddling along somewhere in the middle between South Africa and the world. This prediction is from the World Bank today that released its biannual analysis of the state of African economies. And of course, that's at the annual meetings in Washington, our own finance minister attending the IMF and World Bank autumn meetings. The prediction of 2.4% growth is for Africa this year, and it's lower than the previous forecast of 2.6%. So what's happening? So to discuss, let's join the World Bank's chief economist for Africa, Albert Zefak. He's joining us via Skype from Washington. Albert, thank you very much. So this is 2.4, better than South Africa, but not great shakes. Why are we not seeing more impressive growth in Africa when the world is steaming ahead?
Excellent question. What we are, experiencing in Africa is from the worst performance of 2016, but it's a very modest recovery. As you rightly said, we are modeling through, and the World Bank is projecting a growth rate of 2.4% for sub-Saharan Africa. It's almost double of what we had last year, 1.3%, but it's still below our population. So in terms of per capita growth, Africa is still sliding back, and this is a matter of concern. This modest recovery is powered by three important factors. One is that we have seen a more benign international environment and more benign global environment with growth higher than expected, trade and investment. And as a consequence, we have seen in capital flows in Africa, especially equity investment has increased. And that's a positive news. Now, another factor is basically that Nigeria and South Africa, as you rightly said, are out of turn, but still growing at very, very low pace. Not more than 1.5% for both economies, and this is way below the rate of the collapse in commodity prices. So the third fact, right, is clearly that we have seen a stabilization in commodities prices. Seen a stabilization in oil prices around $55 a barrel, and a slight uptick of those prices by the end of 2016. But economies that are dependent on a single commodity continent, economies in CEMAC region, Nigeria, Angola continue to struggle. But growth is actually multi-speed because countries like Ethiopia, Tanzania, Rwanda, Cote d'Ivoire, Senegal continue to grow at more than 6% per year. So there is still resilience, on the continent. And what we clearly is suggesting is that countries continue their reforms, to strengthen fiscal space, because fiscal space has been tightening in an environment where debt is actually growing. Tightening fiscal space, countries need to really deepen those reforms and deepen structural reforms as well to increase productivity growth.
Albert, the line is not great, but we are hearing you. Before we lose you, I want to ask an important question. You're focusing in this report so much on skills, and we know that Africa has this great resource, people, these young populations, but the problem is that if the world steams ahead, we can have jobless populations if we are not upgrading skills. What are you suggesting to African nations here?
That's an excellent point. The special topic of this report is on the skills, addressing the skills challenge for sub-Saharan Africa. The first thing we noticed, Africa has invested massively in education over the past 10 years, and enrollment rates have increased in primary and secondary education, but those investments have not been matched by quality. The contrary, quality of education has declined in Africa. So what we're suggesting is that countries invest a little bit more in improving the efficiency of public spending in education, addressing issues of training of teachers, providing foundation skills for population. And that's extremely important. Foundation skills include numerical skills.
All right, we're going to cut it there. That was the World Bank's chief economist for Africa, Albert Zufak, simply because we cannot hear him. But what an important topic, the World Bank focusing on skills. And of course, it's so important in a world where we're talking about robots possibly taking over. What do you do when many African populations simply do not have the skills to keep up? And that means you could have huge jobless generations. He's saying there has to be a focus on education, and we hear this refrain all the time, crucial for South Africa.